Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Wednesday, March 10th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I'll be on CNBC's Power Lunch live at 1:10 Central Time, 2:10 Eastern from the rooftop of the Betsy Hotel. Also, my partner, Bill Baruch, he'll be on the halftime show at noon Eastern, 11 a.m. Central Time for the full hour block, giving a breakdown of some of the portfolio moves at Blue Line Capital. I'll be covering gold, silver, the Russell, and the oil contract here, and some of the moves that we're seeing after a lot of these key developments are happening. So the big news, the big overnight news here, Trump's comments that the Iran conflict here could be over soon here, shifting some of the risk tone in a lot of the markets. You saw crude oil's whipsaw here is fading, and also equities are bouncing. The metals complex is recalibrating, and here's where things stand here into today's trading session. So you look at April gold, the range overnight, about $77. So we got consolidation, but it's at the upper end of the trading range here. Don't mistake the consolidation for any type of weakness here, in my opinion. Gold is holding up well as we get this risk on type of turn. So you look at the highs of the overnight, 52.04, the lows of the overnight session, 51.27. Again, 5,200 to about 5,220. That's your key level of resistance here to watch here. So you want to watch the last 5 trading days, that resistance zone, and a break above that close at 52.20 could open up the door for a bigger move to 53.20 and then 54.50. So have those levels on your charts. Look at the 10-day exponential average range continuing to slide to about $148, and gold's volatility at the lower end of what we've seen recently at about 33. That key level of support, that 50.20 down to about 49.96, I really believe is a good long-term support level right around that 5,000 range. Now, failure to hold that range there could potentially see a washout low down to about 49.37. Central banks may step in at that point. ETF flows may also pick back up here as a lot of these geopolitical risks suddenly develop here out of nowhere. So we had the issue with Venezuela. We also had this with Iran. What's next? Is it potentially something with Cuba? We'll have to wait and see. So you look at May silver, that range overnight, $3.58, one of the more tighter ranges we've seen recently, with the highs of the overnight session back over that 90 handle, 90.38, 86.80 is your key level on the downside here. And the 10-day exponential average to range, $6.15. And silver's volatility declining down to 77. So you look at copper, and one of the levels that we had outlined is about that 563, 564 support level. And that metal's really been caught between two competing forces. You got the bullish structural fundamentals, AI infrastructure build out, energy transition, and also those supply deficits that we're seeing. And then you get this bearish near-term macro risk from Iran, the conflict here, but with the conflict fading, some of the global growth uncertainty, it comes back online, and you look at copper futures in the overnight session shooting back up to 590. So you look at stock futures, they are higher, and oil is extending its declines after Trump's comments here really sparked that optimism that we could see things start to level out. So WTI crude oil, which soared up to about $119 a barrel in a wild trading day here yesterday, back around that 89 level, now 90 level. And then you've got that level of support here coming in right around $84, which is where we saw the lows of the overnight session. So Trump said that he would waive oil-related sanctions here, specifically with India and Russia, and then have the Navy escort some tankers through the Straits of Hormuz. So that will be interesting to watch here. He also said that he's weighing in options like releasing some of the SPR, some of those emergency stockpiles. Now you look at the precious metals ETF flows. Unfortunately, they cut the gold holdings for the 6th straight day, and they sold some silver. So I'd anticipate when you get those risk on type of comments, you're gonna see some people take off some of their defensive positions, things like long gold, and then go into things that are like long Bitcoin, long US equities, just looking for that momentum play. You have a lot of the safety as far as the dollar index coming off as well. So when you take some key developments like what we had yesterday, you really wanna take that and put a note on your charts. Hey, this is where President Trump had made these comments on the possibility of ending this war, I would type all that up, have a bubble, and point it to where $119 on crude, or where the dollar index hit 99.65, where gold futures got down to 50.04. $5,004. Like, these critical levels here is where I'll mark where some of these comments are at, and then copy and paste them on all my different charts, so I know that that's what happened. Similarly, in the agricultural products, what I'll do is every USDA report, I'll put down a arrow and also indicate that there was a USDA release, whether it was bullish, bearish, things like that. It's really important to keep some good notes on a lot of these markets here, and then you can visualize and put together what had fundamentally happened at that specific time frame. So you'll get the gold to ETF flows declining about 0.2%. The exchange traded funds, they cut 238,000 troy ounces. 6 straight days selling, longest losing streak since October 29th. October 29th was when we had that first squeeze, that situation that happened in London where there were inventories, the leasing rates had skyrocketed, the inventories had come down significantly, and there was a bit of a squeeze here. And what happened was China alleviated that squeeze by shifting a lot of their silver over to that London exchange. So you look at the gold market, up about 19%. This is coming into yesterday, fell about 0.6% yesterday. And here today, we've got gold futures shooting back up here, up about $81, and sitting here as far as percentage wise, tacking on about 1.5%. So real nice move in that gold market back to the upside here, and getting right around up 20% this year. So the silver ETF flows, they fell about 0.4%. They're down 5% year to date. They cut another 3.18 million troy ounces of silver. We'll see if it breaks out over this 90 level, if the ETF flows and a lot of the FOMO buying, they start to jump in that market. But I anticipate that there's a lot of short selling going on in the silver market, and that's what's been holding it down as far as ETF flows, not price. So we'll see if they can capitulate if futures break out to the upside. You do have 6 straight days of selling on the platinum market, and the gold silver ratio declining to 58-1. So one thing that I'll watch, being a person that monitors the Russell 2000, which is slightly weaker here, will want to watch that NFIB, that small business index, which has risen recently here. The optimism has risen recently, so we'll keep an eye on that. And if there's any movement in the Russell 2000, we'll also have existing home sales, and then the rate cut expectations. So they've really come off the board, not only in the US, but also globally. You get the rising inflation with the energy prices, you get declining growth, you get this global stagflation theme where many central banks out there are now pricing in rate hikes. So the CME's Fed Watch Tool, 2.5% likelihood that they cut rates at March 18th meeting. Not going to happen in my opinion. April, probably not going to happen either, only about a 17% chance. June 35, September's where you get that first interest rate cut, and they are still pricing in 2 this year, September and December. So the dollar index, you got that at 99.30, declining. You get the euro currency, actually on the dollar index, it's at right now at 98.71, so continuing to decline here on the dollar index. And then you go to the euro currency, 116.15. 10-year treasury yields, that's another one that I'll put on my chart where it hit 4.22%. You have Trump's comments, and then it reverses along with oil, along with the dollar index, and things like that. So you got yields back at 4.12%. We'll see if we can get closer. We probably aren't going to break back below 4%, but we might be able to get into those single digits again, between 4.04 and 4.08. So we'll keep an eye on that. You'll get the volatility index. It got up to about 28 before declining, and now we're trading right around 23.5. So we're in the mid to low 20s, and that was after it failed at that 30 level. 30 is where there is absolute panic in the market, and if you're wondering if you're getting stopped out of your intraday trading and things like that, one thing you'll want to do is look at what volatility regime are we in at that particular time. So where you look at silver, when it's having $10 moves in a day, silver volatility, high 80s, even getting up to the 100 level. Gold volatility at 40, that's where gold's swinging $200, $300, $400 a day. Oil volatility at 100, well, it's moving 10, even moved $30 here yesterday. And then on the S&P 500, when the VIX gets to 30, very difficult to position here, at least for any kind of intraday trading. Now, something I'm also watching, Bitcoin. Possibility that it makes a low or a higher low on the charts breaks out over the 75,000 level and continues to move upward, we're going to want to monitor that because it may be posting a low on some of these charts here. You'll get the S&P gamma exposure. It is negative here where the dealers, they are amplifying some of those moves in both directions. However, in light of some of the key developments, I anticipate more deleveraging taking place from CTAs as that volatility decreases. Then you go over to Europe and Asia. European stocks, they rose after a 3-day losing streak, and Asian stocks recovered with the MSCI Asia Pacific Index retracing the previous day's losses and jumping about 3.4%. So be sure to tune in to CNBC. Unfortunately, I do the metals minute so early. It's not, I have a beautiful view of the pool and palm trees and, the ocean, not the Gulf. So it's a bit of a different view out there. So the water is much better at the Gulf, though. A little bit better clarity as far as my opinion is concerned. So, but you guys got any questions, be sure to turn in to CNBC. And if you want to open up a futures trading account or a wealth management account, shoot an email to info@bluelinefutures.com. We'd love to hear from you. And remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.